Namaste, welcome to Arthaniti, where we discuss money and money related matters to help you in your investing decisions. In today's world where economies are interconnected, it is crucial that as investors we know about the various financial transactions that happen around the world. Sitting in India, it might seem distant that China recently sold $2 billion worth of bonds in Saudi Arabia. Why should it matter to us sitting in India? Well, firstly, this is not a routine financial transactions. This will have strategic implications. Why am I saying so? Because it has the potential of reshaping the global currency dynamics and ending dollar dominance. Now, when India is poised to take over Japan in the near future and become the fourth largest economy in the world, as investors, it is very essential that we know about these financial maneuvers that happen around us. These can have impact on the global economy and India simultaneously. So in this video we will discuss this move by China and possible impact it will have on the various economies in the world. China has been experiencing a massive trade surplus, which is expected to reach nearly $1 trillion this year. What this means is China is exporting far more goods than it is importing. Well, this is a good sign for the economy. Yes, but the Chinese economy is plagued with some serious issues. Firstly, its real estate market is slowing down. Chinese property market is struggling with real estate prices falling and major property developers in financial turmoil. The job market also is severely getting affected because of economic slowdown. China has accumulated a large number of US dollars due to its trade surplus. In November, China made a very interesting move. It sold $2 billion worth of US dollar denominated bonds in Saudi Arabia. This is the first time it has sold such bonds in the last 3 years. Now, interestingly, the interest rates on these bonds is just slightly above the US Treasury bond rates. You see, US Treasury bonds are the most safest and trusted government debts in the world. But even countries rated AAA, countries like Switzerland normally pay 10 to 20 basis points above the US Treasury bond rates. What China has done is it sold these bonds in Saudi Arabia at rates at almost at par with US Treasury bonds, only 1 to 3 basis points higher than the bond rates available in the US. The location for the sale of these bonds was quite unusual. Normally, large financial transactions happen in financial hubs around the world, like London or New York, but these bonds were sold in Saudi Arabia. Now, Saudi Arabia is a key player in the petrodollar system. Secondly, these bonds, the issue was hugely oversubscribed. For a $2 billion worth of issue, subscriptions were received of nearly $40 billion. The low interest rate that China has put on these bonds only shows the creditworthiness that people have, the strong confidence that people have in Chinese creditworthiness. This move has the potential of weakening the US dollar in several ways. Now, if China expands such bond sale, countries like Saudi Arabia might start buying Chinese bonds instead of US treasuries. China could use its surplus dollars, I'm sorry, to help other countries repay its dollar dominated debts, reducing their reliance on the US economy. Thirdly, by issuing dollar bonds in Saudi Arabia, China is demonstrating its ability to manage dollar liquidity in a key oil market. What investors should watch out for is whether this is going to be a new strategy by China. Firstly, the timing of this bond issue. Well, this is not the first time that China is selling such bonds, but the timing of this particular bond issue is very crucial. The issue comes just before Donald Trump returns to presidency, who, by the way, Donald Trump has threatened to increase the tariffs on Chinese products by nearly 60%. The choice of Saudi Arabia as the venue for this sale is quite unusual and strategically significant. While the immediate impact of this sale on India might be limited, the long term impact cannot be ignored. Firstly, if US dollar weakens, it could affect rupee valuations in relation to other currencies. Again, changes in global currency relationships could impact India's import and export. Lastly, Indian investors might need to reassess their international investment strategies if global currency dynamics shift. To conclude, China's recent bond sale is a complex move with potential global repercussions. For Indian investors, it is crucial that we stay informed about such international financial maneuvers as they can indirectly affect our economy and investment landscape. Remember, diversification and staying updated about global economic trends are the keys in today's investment scenarios. I hope this video has helped you understand this move by China and its possible repercussions. If you have liked this video, please like, share, and subscribe to our channel for more such information and interesting videos. Until next time, stay safe. Goodbye.